Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier retraced from the 27,000 all-time high level, forming a shooting star candle. Since then, we did see a sharp correction on the Dow Jones. It pulled back towards the 24,000 psychological level and subsequently recovered from that point onwards. Since then, we are seeing the Dow continues to march higher. It staged just a one-day pullback over the past like five to six trading days, and subsequently the Dow has recovered back above the EMA 20 and also the EMA 60 level on overnight. Gains on the Dow Jones came in ahead of the US midterm election outcome. So moving forward, on technical wise, we need to monitor for this level, the 25,800 points. If the 25,800 points level were to be breached, then we could see further upside on the Dow Jones to head higher back towards the 26,000 or even back towards the 26,500 points level. In the meantime, the immediate support level will be located towards the 25,000 psychological level on the Dow Jones. So the US midterm election outcome will determine the direction on the Dow Jones. If President Donald Trump his party could remain in power, then we might see the Dow Jones hits higher and vice versa. Similarly, on the S&P 500, we did saw the S&P 500 has retraced from the recent peak of around the 2940. Since then, we are seeing the S&P 500 headed towards the 2600 psychological level before recovering. And on overnight itself, we are seeing the S&P 500 has recovered to close above the EMA 20 level. So for now, on the S&P 500 wise, let's monitor to see if there's any follow-through buy interest above the 2750. Should there be a follow-through buy interest above that, then we could see further upside for the S&P 500 towards the 2800 level. In the meantime, the 2700 will serve as the immediate support level on the S&P 500. With some updates on the crude prices, the crude prices continues to slide after the pullback below the 70 US dollars barrel level. Since then, we are seeing a technical rebound just towards the 67 or 68, but the recovery did not last long as the crude prices continues to slide for the next 7 consecutive trading days. After, despite the sanction on Iran has begun. The weakness was mainly due to the rising inventory level in US. So for now, technical wise, we are seeing a further pullback. We could be seeing a further pullback towards the 60 US dollars barrel mark. That will be the immediate support level. While any gains for now will be just taken as a technical rebound just towards the 64. So gains will likely to be capped just towards the 64 with the downside located towards the 60 US dollars barrel mark. Okay, some of this on the local front. The FMKLCI has earlier been trading between the 1770 towards the 1830 level. Since then, we are seeing the key index has subsequently pulled back. It recovered towards the 1740, but the recovery did not last long as the weakness continues on the FMKLCI as the key index slide towards the 1670 before it recovered. However, on Monday itself, we are seeing the FMKLCI has formed the bearish engulfing candle after the tabling of budget 2019. The weakness on the FMKLCI on Monday was mainly due to the sell-off in Genting, Malaysia, and also Genting after the budget 2019 unveiled a series of increase in duties and levies on the gaming sector. So for now, on the FMKLCI, because seeing some of the further retracement on the FMKLCI, should the 1700 level were to be violated, then we might see further pullback towards the 1670. But if the FMKLCI can continue to maintain its stance above the 1700, then we might see gains will likely to be capped just towards the 1740 level on the FMKLCI. On stocks wise, you can watch out for some of the defensive like healthcare stocks like the KPJ. KPJ Healthcare has rallied towards the recent high of 1 ringgit and 17 cents a level. Since then, we are seeing a healthy pullback on our KPJ just towards the low of the 1 ringgit and 1 cent. After touching the 1 ringgit and 1 cent, we are seeing KPJ has formed the bullish candle on Monday as price retested the EMA 60 level. For now, we need to monitor for this short-term trend line breakout above Monday's high of the 1 ringgit and 8 cents. Should price breach above the 1 ringgit and 8 cents, we could see further upside for KPJ to hit higher towards the 1 ringgit and 17 cents. That will be the previous resistance level, followed by the 1 ringgit and 25 cents level. Your stop loss point on a KPJ will be located towards the 1 ringgit and 1 cents level. Should there be a breakout above the 1 ringgit and 1 cents? Sorry, should there be a breakout above the 1 ringgit and 8 cents? Should price breach above the 1 ringgit and 8 cents, we could also be seeing the MACD indicator to issue a buy signal, whereas the RSI could be rising back above the 50 level as well. On our TMC live, price is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound play. Price has earlier hit towards the recent peak of intraday highs 82.5 cents level. The 82.5 cents is a very strong resistance level. Yes, earlier we tested the 82 cents level on several occasions since the beginning of the year, but we did not see any follow-through by interest beyond that. So for now, on a TMC Live, we are seeing a good recovery towards the 82.5 cents before price pullback and traded on a sideways manner. But on Monday, we are seeing price has experienced a short-term consolidation breakout above the 75.5 cents level, accompanied by some of the improvement in volumes. With the breakout above the short-term consolidation of 75.5 cents, any pullback for now will be a healthy pullback for us to accumulate before the next recovery to resume for us to target towards the 82.5 cents or even towards the 86 cents level. Your stop loss will be located towards the 72 cents on TMC Live. On Eastern and Oriental E&O, price has again formed the triple top formation on top of the 1 ringgit and 66 cents level. Subsequently, price has pulled back and it violates below the 1 ringgit and 43 cents before sliding lower towards the 1 ringgit and 7 cents. After touching the 1 ringgit and 7 cents, we are seeing some of the accumulation was taking place on E&O between the 107 towards the 1 ringgit and 19 cents level, and on 1 ringgit and 20 cents level. And on Monday, we are seeing price has seen the follow through by interest as price closed above the 1 ringgit and 20 cents level. With that, we could see further technical recovery on E&O, firstly towards the 130 or even towards the 143. Your stop loss point will be located below the 1 ringgit and 7 cents on E&O. So any recovery from now will be just taken as a technical rebound play until we can see a higher high and also the higher low formation. Only we can confirm for the recovery on the E&O. On MGB, our price is still in a downtrend formation, so any recovery from now will be just taken as a technical rebound play. On MGB, we are seeing price has pulled back towards the 68 cents level, and subsequently price has been seeing some of the accumulation was taking place with some of the higher volumes being traded over the past couple of weeks. And since then, we are also seeing the potential bullish divergence signal as price has been traded, forming the lower low formation. But throughout this period of time, we are seeing the MACD indicator forming the higher low formation. For now, despite forming a shooting star candle, however, this could be an accumulation that we are seeing because this shooting star is on a sideways shooting star, so it's not on an uptrend shooting star. So for now, this could be taken as an accumulation taking place on MGB that we're going to monitor for the breakout above the 76.5 cents. Should price breach above the 76.5 cents, we can trade MGB towards the 84.5 cents or even towards the 90.5 cents level. Your stop loss will be pegged below the 78 cents on MGB. Last two company for today will be Tropicana. Tropicana has been on a sideways formation after a sharp pullback towards the low of 81.5 cents. Subsequently, price traded on a sideways manner. It has recovered above the 81.5 cents level, again forming a double bottom formation. As for now, we are seeing Tropicana has staged a short-term consolidation breakout above the 88 cents level on Monday, that we are expecting for further buying, follow-through buy interest for Tropicana to trend towards the 91.5 cents. That will be the intraday target for now. Should price reach above the 91.5 cents, we could expect further upside for Tropicana towards the 95 cents or even towards the 97.5 cents level. Stop loss will be located below the recent low of the 80, 86 cents, followed by the 81.5 cents level if you can take further risk. With the breakout above the 88 cents level on Monday, we are seeing the MACD indicator issuing a buy signal, whereas the RSI has been flirting above the 50 level over the past week. Last company for the day will be Sunway Construction. Sunway Construction, earlier we did mention on a Monday that we are seeing a breakout above the 1 way at 56 cents, and on Monday itself, we are seeing the follow-through buy interest on Sunway Construction. Despite the price has been traded lower on intraday basis, but at the end of the day, we are seeing as the bargain hunting activities on Sunway Construction has pushed the share price higher, just marginally higher compared to the last Friday's price. So this proves that there's some of the support still being located above the 141 cents level on Sunway Construction, that we could be targeting towards the 172 or even towards the 183. Your stop loss will be supported towards the 141 cents level on Sunway Construction. If you have any questions, you can put in the chat box. I'll reply you shortly. There's some question here on our Care Plus. Care Plus is still on a downtrend formation right now. Price is still forming the lower high and also the lower low formation, but we are seeing some of the support along the 19.5 cents level recently. So for now, let's monitor for this 19.5 cents and also this potential trend line breakout, which is near the EMA 120 level as well. So for now on Care Plus, we need to monitor for this breakout above the 22 cents. Should price breach above the 22 cents, then we can trade a Care Plus just for a technical rebound play towards the 24 cents or even towards the 26 cents level. Your stop loss point will be located towards the 19.5 cents level on our Care Plus. So for now, we are also seeing some of the potential bullish divergence signal at current juncture as price traded lower, but the MACD indicator has been forming the high-low formation throughout this period of time. Just that the volumes recently is not much; it's still below the volume moving average. So let's monitor to see how price, until we can see price breach above the 22 cents, accompanied by some of the higher volumes, something above the 1 million volume being traded, then only we can confirm for the recovery on Care Plus. If there's no further question, then we'll end the morning briefing for today. Thank you.